Okay, my first chart request video. NBIS was mentioned several times on both my threads and X account, and yeah, I chose this one because I didn't make a video about it before, and I like explaining about new situations. So first of all, I'm gonna show you a strategy I use a lot in my trading, and also what we did a lot when I was working at a trading firm. So it's basically two strategies. First one is trading double bottoms in the low of our range. So here you have a double bottom. You can make an argument here too. As long as you are in the low of range, you have a good probability and a good risk reward. The risk reward comes from being low, and the probability comes from the fact that you're already low, so there is not that much of a chance to go even lower. But what you can also do is trade channel breaks like this one. You enter on the break, put your stop up here or up here if you want higher probability. It could be you get stopped out, but then you get back in again with a stop below. That happens. Here you have a situation again that you can draw a box, right? And you are now in a low of range. Here you have a double bottom in the low of range, so you enter up here, place your stop up here. Good probability because you've already had the correction. It's probably not going to come again. And you have a good risk reward because you're low. If you don't like the boxes, you can also, of course, take the channel, connect these lines. It will get you to this line. When this line breaks, there is something shifting, right? If you miss the boat and you have enough patience, just take this flag. Normally I would be cautious with taking late entries, but because this one is already also sitting on this support and we are still relatively low in the range, I think it's good enough. I think it's good enough to trade it. Here, just a channel break. You can also trade it to the short side because this is bull channel. Bull channels usually break to the downside. Here you have a very nice trading range again, and this range is in the bottom, double bottom in the bottom of this range, so good probability, good risk reward. I also like this flag up here because you are sitting on that top. We went enough sideways for it to assume that we have now ranged enough, and then the next phase after range is always a trend. So perfect entry here, beginning of the year, February. But take the breakout, put your stop up here. Your stop held up nicely because so many buy orders are defending this top. Okay, but then you probably want to know what we're going to do right now and what's likely to happen next. Well, first of all, like I showed you the examples, we would like to see some little bit more of sideways, and I'm just doing something now, and so that we can draw a trend line, and then we have a trend line break, and then preferably it's going to sit on that high. We basically already there. But if the thing gonna come back, build some pressure. It does not have to be like this. It could also be like this. And then you could go for the re-entry again. Buying up here is just, I think, a waste of time. Not necessarily money, because I believe the structure is still bullish. So eventually, even when you go lower, it will find buyers back up. But yeah, probably it needs to range more, like what we did here, or in the other examples I saw. So I would just patiently wait for a nice flag to make, preferably a little bit lower, and then take the breakout of the flag. That's how I would trade it. So I'm skipping a lot of charts. When I trade these, I will publish it live on my Patreon. Then you don't need to skip. You need to swap all the charts yourself. But yeah, that's how I trade it. So if you have any questions, let me know. If you like the video, also let me know in the comments. It's good for the algorithm and it will help my views. Okay, thank you.